Hi, this is Jeff Turnahoy and welcome to Lipper's Fund Flows Insight Report. For the week ended January 23, 2013, the conventional mutual funds industry saw decent inflows across the board with the exception of money market funds. Let's take a look at our macro groups and see what happened. Starting off at the top, equity funds put in yet another good week of flows, this time about $3.7 billion. Taxable bond funds also took in flows and were not to be forgotten by investors. They put in about $3.5 billion to these funds. Municipal debt funds took in a reasonable $800 million for the week, and money market funds saw flows head off the sidelines and into the field with about $4.8 billion removed from them. For these equity funds, it's been a long time coming since investors put this much money to work over a 3-week period. In fact, we have to go back to January 2001 for a time when investors put in this much money, over $11 billion over the past 3 weeks, into equity funds. This week, another $3.7 billion was a pretty good showing. Let's take a look and see how things have stacked up for equity funds. Another good week, very positive sentiment, the best 3 weeks again since January 2001. Generally, we saw the same patterns, though, that we saw near the end of last year, with large cap growth seeing outflows, equity income seeing inflows. What's happening here is the funds in the middle just aren't getting a whole lot of action. People are either standing pat on those or while they're adding to some of their other strategies. So overall, this has been a good sentiment moment for equity funds. We continue to see inflows to non-domestics outpace domestics, generally speaking. This week, bit of an this week was no exception, I recall. Non-domestic funds took in about $2.2 billion, domestic funds about $1.4. So overall, a pretty good showing by equity mutual funds. Let's take a look at the equity ETF universe. Here we saw a very different outcome. Overall, equity ETFs had outflows this week of $700 million. It's not the end of the world, but we saw investors getting out of SPY to the tune of $4.4 billion in outflows. Again, we saw non-U.S. tend to take in money this week among ETFs, but domestic ETFs, of course, SPY being the heaviest weight among them, had overall outflows on a net basis. So generally speaking, investors were much less interested in U.S. Equities as far as ETFs go, but they were interested in things like Japan, for example. Next group to take a look at is taxable bond funds. Again, $3.5 billion this week was pretty good. In fact, they've had about $3.3 billion coming in over the last couple of weeks, so back to normal in that sense. Loan funds have been far more popular among investors than high yield funds, about $200 million more this week for loan par funds, which took in about $553 million. Intermediate investment grade, a typical core holding for taxable bond fund, mutual fund owners, was in second place on the flows list. Let's take a look at fixed income ETFs. Here we saw about $356 million come in. Again, a decent showing for these funds. But this is the second week in a row we've had inflows, and the temperature in this bath is pretty tepid. The flows have been rather light and not too much direction involved. It almost looks like opportunistic trading by some investors rather than the jumping in with both feet the way we've seen mutual fund investors behave. Next group to take a look at is municipal debt funds. Again, about $800 million this week. That's a pretty good showing. Looks like it's normal flows as far as recent trends are concerned. The tax issues that kind of hung over this side of the industry as 2012 came to a close have been settled. We're starting to see inflows come back in after some outflows to end the year. Overall, we saw just 3 groups take in the bulk of assets. We saw general and insured muni debt funds, high-yield muni debt, and intermediate muni debt take in nearly all of the flows this week. Single-state funds have not been terribly popular in a while, just modest, single-digit millions, very close to zero in them. The last group to take a look at is money market funds. As I mentioned before, they had outflows of about $4.8 billion this week. A little bit different here. We saw retail money come off the sidelines. They had outflows of about $7.2 billion. I suspect a lot of that's going to work in equity and fixed income funds. The institutional investor, meanwhile, wanted to hold some cash. They put about $2.4 billion into their money market fund coffers this week. Well, that'll do it. Please join us online at www.lipperusfundflows.com for up-to-date information, as well as more information about funds than we could talk about here. Or join us next week and we'll have another video and talk about the analysis behind fund flows. Thank you.